Hi, everyone. Welcome to your latest Carson's Take 5 with Ryan and Sonu. Sonu, we are titling this one, Yes, Stocks Can Go Down. We've been spoiled. We've been coming on these for a long time, talking about how stocks have continually gone higher. We gained 10% the first quarter in the S&P on top of a double-digit return the fourth quarter last year. I mean, it's been this great run, but we've hit a little volatility. How surprised should we be the stocks, at least at the time we're recording this, have pulled back more than 5%?
It's almost a cliche to say this, but don't be surprised by anything that happens in markets, right?
Yeah.
And especially if there's a pullback, whether it's 3% pullbacks, 5% pullbacks, 10% pullbacks, even bear markets happen every now and then. You know, over the last 5 years, we've had two bear markets, one in 2020, one in 2022, and the market's still up, 100% or something like that, right? It's up a lot. So it just goes to show this is part and parcel of what you expect if you are investing in a risky asset like stocks.
Yeah, and I think a key concept being you could have these pullbacks. A correction is like 10%, bear markets 20%. We've had bear markets without recessions. 1987, bear markets without a recession. Even 2022, we did not have a recession, but we did see stocks go down at least, well, actually about 25% back then. So trust me, most of your large bear markets take place when? During a recession. The average bear market under a recession, at least back to World War II, is around 34 to 35%. So pretty rough. Now, again, we're not in a recession right now, but we've had the first 5% correction. A little color on this. We'll call this a 5% mild correction. We're going to call this. Your average year, Sonu, sees more than 5% mild corrections. You see as many as 3% little mini little corrections. And on average, you see 10% correction a year. Now, that doesn't mean every year has to have one, but think the last year, stocks gained over 25% on a total return basis. We still had what I'm going to call pretty scary, because the media was scared, a lot of people were scared, 10% correction into late October. It's just something to think about. What do you want to add here?
No, and over the last year, at least through the end of March, markets gained, the S&P 500 gained about 30%. That's not normal, right?
It's true.
That's not normal. So, anytime you think about pullback, I mean, I hate to say, I mean this sincerely, like this pullback, it's kind of healthy. You want pullbacks. Because sometimes people get a little too euphoric. Sentiment goes too far in one direction. And, you want to shake some of that off the trees, so to speak, and say, you know what, maybe a little pullback is healthy for the market. Valuations come down a little bit. And it becomes, returns become more about earnings growth, profits, things like that. We're in the middle of earnings season. We're not seeing any breakdown in profits. Companies are still doing well. They made good profits last quarter and looking ahead as well, which is probably more important. Profit growth is solid. Forward expectations of profit margins are running well. Forward expectations of capital expenditures, CapEx, that's what you need for productivity growth and things like that. That's running strong too. So all of that, sets the backdrop nicely, I think, for stocks going into the rest of the year.
No, well said. If your average year gains, about 8, 9, 10% for stocks, getting there is anything but average. Over a time frame, yes, you'll get there, but you can have a lot of volatility. And honestly, things happen. We talked last week, right? The geopolitical concerns that are out there, not minimizing those, but as of the time we're doing this, those have kind of calmed down. Markets, bouncing back a little bit, but the underlying pinnings, the underlying fundamentals of the U.S. economy, you just touched on many things. We're starting to see manufacturing as well starting to come back. Some of those manufacturing surveys, which have been so dour for the longest time, are showing a little more optimism. The hard data has been strong. So those are some other positive things. Let's dig into that. How much time do we have? We got about less than a minute to go. So again, stocks have pulled back. So maybe they were a little frothy, but talk to me one more time about earnings. So if earnings are still strong, but stocks have pulled back, that means it's a better opportunity for investors to buy, at least not something that's wildly expensive, right?
Exactly, right? Because if you think about stock market returns, you can break that down into earnings growth and multiple growth, valuations. How much are investors looking to pay for future earnings, right? If they get too euphoric, sentiment goes too far, gets too optimistic, they start to say, you know what, we'll pay a lot for future earnings when maybe it's not worth that much, right? So valuations can get stretched. And that's kind of what we were seeing up through the end of March. Now it's pulled back. Now the returns, the S&P 500 through the end of last week was up about 4%. Most of that 3.5 percentage points came from earnings growth. And that's kind of, it's not a bad thing. And 4% in 3 months is actually not a bad thing, right, Ryan?
No, it's not. I mean, again, let's not be too spoiled here. I mean, we've had a heck of a run. I think it's just important for this to wrap this up, put a bow on it, to remember we've had a historical run. Everyone turned into a bull this time about a month ago. And what does that tell us, right? If everybody's thinking alike, somebody isn't thinking. General Patton, I'm sure I've used that many times on these. I love that quote. Everybody's bullish. And sure enough, now we're getting this shakeout. And that's perfectly normal. Most years, even put it this way, even your strongest years have some pretty scary moments. I remember in 2013, that was a great bull market. Okay. It was like 30%. There was a pretty scary time in June. I mean, some geopolitical worries back then. People forget that. But again, every year is going to have some type of new worry, something to think about. But the underlying pinnings remain strong. And again, to wrap it up, yes, stocks can go down. That's what we just talked about in your latest Carson's Take 5. We'll see everybody next week. Take care.